So really trying to, reposition the current, assets you have and, try to create this, a more optimized portfolio for where you're headed is key.
Hey, everybody. Welcome back to another episode of the Richer Geek. In today's episode, we have Dave Wolcott. And Dave started his career by serving the our country, as a captain in the Marine Corps. Thank you, sir. Appreciate it. And in 2000, he and his wife brought triplets into the world. That'll keep you a little busy. And that inspired him to challenge the traditional financial planning, which we all are kind of looking at diversifying. But Dave is he's an author, podcast host himself, and founder and CEO of Pantheon Investments. And he's passively investing in superior real estate, which a lot of us do, alternate assets, which we'll get into. And most importantly, he wants predictive cash flow, tax efficiency, and upside potential. How you doing, Dave?
Doing great, Mike. Thanks for the opportunity to connect with you and your listeners, and grateful to be here.
Absolutely. So, again, thank you for your service. We all think you guys are the true heroes, the veterans. Give us a little bit about your background and what got you into all this stuff.
Yeah, no, I appreciate that, Mike. And we were in the service around a similar time frame, and during those days, right, it was the old, conventional wisdom that was go to school, get good grades, you'll get a job, and life will be rosy, right? That's the recipe for success. So I kind of started following down those footsteps. I did the ROTC program and joined the Marine Corps, and had a fantastic experience in the Marines. You learn about things that they don't really teach you anywhere else. Things such as integrity, leadership, teamwork, right? All of those really key principles. And then when I got out of the Marine Corps, I got into corporate America, and I was really quickly dismayed, Mike, right? Because I lost that sense of purpose, that sense of mission. Everything was about quarterly results and no, true teamwork and things. And at the time, we started working, with some different financial planners, and they kept telling us the same exact thing, right? Which is, market's going to go up, market's going to go down, but, stick in there, you'll make 7% over the long haul. And then, as you pointed out, on October 24th, 2000, my wife and I actually won the baby lottery, had triplets, plus we had another child. So we literally quadrupled the size of our family. And so nothing will have you, looking at your financial plan more, right, than going through that type of exercise. So that really put me on this path, Mike. I got on this path, really an obsessive journey to figure out how the 1% are really building their wealth, because I quickly realized it wasn't, as a retail investor in the stock market. Right. So I started, investing in alternative assets, got into everything from raw land to oil and gas, to retail centers, multifamily, all kinds of different alternatives. And then shortly thereafter, if you recall the, cash flow quadrant, right, with Robert Kiyosaki, which we've all learned so much, I became a business owner as well. And I know your audience is full of tech folks. So in 2000, I was in the tech industry myself, and actually created a tech consulting company, and learned a lot of things about growing a business, but I also learned a lot about taxes, right? And how you can really manage that, right, as a business owner. So fast forward to today, 20 years later, and I really took those, 20 years of experience in investing in all these different asset classes, and really trying to create a strategy so I could help other people, figure this out, right? Because Wall Street, they want you to think that they're the smartest ones in the room and you can't do this on your own, right? So I was trying to dispel all of those negative, beliefs that were out there, and really create this comprehensive system, which is essentially what my book is called, The Holistic Wealth Strategy. And it is really a comprehensive system to, not only multiply your wealth, but also to protect your wealth and really live the life that you want to live.
Okay, so let's dig into a little bit about, again, everyone, it's called the Holistic Wealth Strategy. So give us some of the strategies, kind of break down, what are you looking at? What kind of the topics are you going into to teach
Sure.
people?
Well, it's really, it comes down to 5 simple phases, right? And we all start this with basically creating a vision, because if you don't have a target, you're going to miss every time, right? And sadly, most people spend actually more time planning a vacation than they do on their future, right? And this is really, all about you. So it's about getting clarity and crystal clear on where it is you're going. That's kind of one of the underlying things that we do. And then in phase 1, it's really all about mindset, right? And really understanding, some of your beliefs, your habits, creating goals for yourself. And it's interesting because there's so many people that I talk to in this kind of private equity space, or people that are new to investing, and we all have such limiting beliefs, right? And a lot of it comes from this $30 trillion financial services industry that wants you to think a certain way. Right. So when I tell people that I took my 401k and completely exited it, sold it, paid the 10% penalty, paid all the taxes, people think I'm absolutely crazy. But I can tell you that now, probably, 6, 7 years later, I've actually tripled my money since then. Right. So there's a lot of things, and, I had to go through, a lot of a process, to be able to do that. But it's really having this growth mindset, really always asking questions so you can make informed decisions, looking at all the different, data points that you have. So that's why we always really start with mindset. And then as you move into the second phase, we talk about basically trying to increase your IQ around your financial IQ, your mindset IQ. We also talk about health IQ, right? Because you can actually have, all the wealth in the world, but if you don't have your health, right, where is it going to get you? And a lot of people actually, consume all of their wealth to support their health. So I think that's really a key piece that people need to have, and also relationship IQ. You're definitely a product of the 5 people that you spend the most time with. So are those people advancing you towards your goals and where do you want to get to, or are they actually detracting you and taking you further back? So as you go through, increasing your IQ and kind of getting smarter, you start to see some different possibilities that are available in the alternative asset space, and how some of these things can really work. So again, there's 5 phases. And so we started with mindset. We then talked about increasing our IQ. And then the third phase is actually creating an infrastructure for yourself. And what we mean by that is, number one, it's trying to actually mitigate some of your biggest expenses that you have in life, right? And the number one item is taxes, right? So no one really spends any time trying to actually mitigate taxes. They just kind of take it as, hey, that's what it is, right? But if you can create, a proactive tax strategy, it's extremely powerful. For instance, we have this oil and gas opportunity that you can actually deduct 100% of your investment against active income, right? So that's really huge way to, use a particular strategy, right, to, to offset taxes. We also talk about things like estate planning and making sure, you're growing and creating kind of a legacy. And then we also, we actually have been such a proponent and have using this for almost the past decade myself, is the infinite banking policy, which is kind of a unique concept, right? But a lot of the ultra wealthy are basically using a cash value whole life insurance policy that grows completely tax deferred. You can pass it to your heirs tax free. It creates a reverse income stream that's tax free, and it's a great place to put dry powder to have like liquidity, right, for investing in deals or things like that. So we help clients with that. And those are some key things that you want to set up, and maybe some different entities depending on, your structure. So that's really the third phase.
Mm-hmm.
And then in the fourth phase, we move. A lot of people will say like, "Hey, Dave, this sounds great, and we'd like to do an investment, get into our first alternative investment, but we don't have 50 or 100K lying around right now, right?" So here we really talk about asset repositioning, and at least 90% of Americans typically have the majority of their assets tied up in government-sponsored qualified plans, so 401ks, IRAs, or they have it tied up in their primary residence in their house. And, equity tied up in your primary residence is trapped equity. The rate of return on it, Mike, it's zero, right?
Mm-hmm.
So it does not make sense, contrary to, Dave Ramsey and Susie Orman and a lot of the folks out there telling you to pay off your house early and things like that. Well, if you're a sophisticated and savvy investor, and you can borrow money even at today's rates at 6%, and I can make 20 to 30%, right, through following this strategy, then which would you rather do, right? And also increasing, your tax, your deductions, right, that you can have by doing that. So accessing that is really key. And then, like I had pointed out earlier, with a 401k, that was something really amazing that I went through that process, and I really modeled things out on paper. And if listeners are interested, we actually have created a calculator of if you were to exit your 401k, compared to how the results would transpire if you kept it in your 401k over the next 20 years. You can model your own assumptions and kind of see how that does. But I got to tell you, it's really eye-opening, Mike, when you go through that exercise, because you could take a conservative, investment such as a multifamily syndication that's maybe making 20, let's say it's 20%. You're offsetting the taxes using bonus depreciation, and if you compound that over 20 years, even after you've paid the 10% penalty and the 35% in taxes, that amount grows to over 2 million in 20 years, versus if you kept it in your 401k, it's actually just over 200K and change, net of taxes, inflation, and fees. And those are the three things that financial planners just really do not, enlighten their clients on. Because remember, you're going to be taxed at ordinary income tax rates when you withdraw that money. So really trying to, reposition the current, assets you have, and, try to create this, a more optimized portfolio for where you're headed is key. And then in the last phase, we really move into creating massive passive income. And in that sense, what we're doing is, we're looking for opportunities that are multipliers. And as you pointed out earlier, our investment thesis really focuses on only opportunities that have cash flow, tax efficiency to them, and some type of forced appreciation upside. So that way you can actually really get a multiplier, right, with the investment, versus think about a stock. If you have $1,000 in Tesla stock, that's all it is. Right. And you're just hoping that stock can go up in value. In this case, we're getting, tax benefits. We're getting that upside. You're getting that income regularly. And that's how, we're getting, clients can see 20, 30% gains easily and more, following this strategy. And I think the last piece I'll kind of just wrap this whole, strategy with is that When you tie all these things together, the sum is greater than the parts, right? So it's just this exponential compounding effect you get when you're mitigating your top expenses. You're, reducing taxes, right? You're looking at, building up cash flow, right, through multiple streams of income. You're having liquidity events on, diversified different asset classes, right, across different operators, different markets, things like that. And this is truly how you can exponentially multiply your wealth, as well as do it, on a much lower risk, right?
Mm-hmm.
So this is basically, asymmetric type returns.
A couple things. I was jotting some notes down. Now, if they're still working and they're still contributing to, and maybe employer matches into the 401ks and IRAs, do you want them to keep putting into it and maybe put a portion into, maybe do a self-directed, so they can take more control over it, while they're still working and putting money into it?
Well, I think there's that like good, better, and best type situation, Mike. So I think if people have an existing, IRA, sure, you could convert that into a self-directed IRA so you could get into some of these opportunities, but you are still under the guise of that qualified plan, which means, you're not going to be getting all of the benefits, the tax benefits, right, from the opportunity. And also the government is telling you how much money you can put in, how much money you can take out, when you can take it out. And a lot of this is also about control, right? I don't know about you, but I want more control of my hard-earned, capital that I've had. So, why have the government, dictate that to you?
Yeah, and the government absolutely hates that you don't pay taxes. A very quick reference to that. They just released Trump's tax returns, right? Well, what does Trump do? He's in investing, all these different type of alternative investment groups, and whether you like the guy or not, the point of this is the first thing that people looked at was he makes all this money and he doesn't pay any taxes, or he pays less taxes. And it's because he has smart CPAs and he does these things that you're talking about as far as reducing his tax basis by depreciations and cost segregations and all this sort of stuff. And you can do it. It doesn't matter how much money you make. You can get a refund. Why pay taxes? Have these assets that have depreciation.
Yeah, for sure. I'll tell you, Mike, I've got a lot of scars and war wounds here. Over the course of many years building companies, I literally fired 5 CPA firms. I paid more and more each year. And there was nothing more frustrating than getting to the end of the year, think you have a good year, and then March comes around and they say, whoa, you did well, and this is what you owe, right? And it was all kind of looking at things in the rearview mirror. But what I learned that's really interesting is that the tax code is actually a series of incentives, right? It's 6,000 pages of code. The first page really just tells you need to pay your taxes, but the remaining portion of it, it's all about being a partner with the government. So none of this is loopholes, legal, illegal, or anything that people talk about, but we're investing in things that the government wants you to do. So for instance, we talked about oil and gas, right? Oil and gas literally supplies everything we do, not only in this country, but also, globally, right? It supports our strategic defense. We were in the military. We need energy to fuel those ships and tanks and everything else we have. So, right, that's very strategic to us. It also supports the GDP of this country, right? And how we can grow. So the government, therefore, is giving us incentives, for operators to be able to, mine those wells and natural gas and produce it. So that's why they do that. Same thing in real estate, right? We're providing housing. I mean, there's a major, even, at the time of this recording, early 2023, we have, I believe it's 6 million units short in the US. So there's just not enough housing. So that's why they're providing, strong benefits, to put real estate in place. But once you, I think, fundamentally make that paradigm shift around understanding that taxes are really a series of incentives for business owners and investors, and how to actually leverage those, then you can get the maximum impact.
Yeah. And, ladies and gentlemen that are listening, it's not just for what I would call the general partner, the owner. As a limited partner, if you get into something, and Dave, you can correct me if I'm wrong, but they can get the same tax benefits as the general partner, even though you're a limited partner, you have nothing to do with the investment. Here's 50,000 or 100,000 that you've given into a syndication or a fund. They get all those benefits also.
100%. Yeah, exactly. And that's what, we kind of talked about as part of the strategy, is by converting. So, if you're in a top tax bracket, right, and you're paying 40+% in taxes, just think about what if you could reduce your taxes by 10-15% on a perpetual basis, that much more net investable income that you would have to put into assets. And then as you continue to grow your asset base, you just keep increasing that passive income. All of that passive income ideally is getting offset through things like depreciation, right? So therefore you're now creating income streams that are taxed at nothing, versus your W-2 job.
Yeah. And that's very important, because everyone, we're, especially in America, there's no such thing as a 40-hour work week. For those people that are in sales or in tech or in businesses, it's the computer's always on. So to sit there and say, my God, I'm paying so much money into taxes, and then knowing that the Wall Street doesn't help that. You can't get those bonus depreciations and the cost segregations. It's at the end of the year, you have the statement that says you made this much, or if you sell it, you have to report it. And it's just a great idea. And I like what you said, where it's a partnership, where they want you to not pay taxes. They're giving you these ideas. And, a lot of people don't like it. Well, they can change the policies. You don't get mad at the person that's going by these rules. What are you doing now as far as we've talked about some assets. Are you doing multifamily? Are you doing some of the things? We talked about the oil and gas. What are you doing now?
Yeah, in terms of alternative assets and asset classes that we're focused on, again, we really try to stick core to that investment thesis. Again, right, which is tax efficiency, predictable passive income, and appreciation. So really asset classes that fall into that. The oil and gas is really key, because that's such a good solution of offsetting some of that W-2 income. We have a lot of high income earners trying to offset that. So that's been pretty good. Plus it's paying double digit cash flow and has an equity multiple on the back end as they exit. So that's a pretty good one. The other thing about these asset classes that we're going after, if you remember back to Maslow's hierarchy, right, we're trying to invest at things at the base level, so that, again, we're in the early 2023 right now. There's just so much uncertainty out there. But I can tell you that, oil and gas prices are going to continue to go up, right? Because people need energy for everything that it is that you do. People need housing, like we talked about, right? So multifamily is another big asset class that we look at. We're also into self-storage. Those are really good, opportunities there. I think, those are some of the key ones. And then, like I said, creating an infinite banking strategy where you can add more overall velocity to your portfolio, right? By taking some of those passive income streams, putting those into your policy until you're building that next tranche for the next deal. So that can really add some as well. But I would say those are some of our, key asset classes. We're looking for really low risk, higher returns. And again, we can win on 3 different fronts.
So Holistic Wealth Strategy, again, everyone, is the book. Where can people find the book?
Yeah, so folks can get a free download to our ebook if you go to pantheoninvest.com, wealth/wealth-strategy.
Okay. And ladies and gentlemen, I'll put that in the show notes so you don't have to rewind it, a couple times and listen to it. So it'll be in the show notes for you. And thank you for that. I'll definitely download the free ebook and listen to it and read it. Where can people find you as far as the Pantheon Investments and yourself if they have any questions?
Yeah, I guess the other thing is probably by the time this airs, we should be live with our new book on Amazon as well. If people want to get a hard copy, the Holistic Wealth Strategy, so you can pick up a copy there. Or if you come to our site, we should just have one free with shipping and handling. But yeah, anyone can hit me up, LinkedIn or our website, pantheoninvest.com. And, I'll tell you, Mike, I mean, this is really a passion project for me. This is all about serving other people and how we can create impact and educating folks on some of these different strategies that frankly, just, people don't understand, right? They don't have the time to understand. And we've all been taught really by Wall Street, but by removing that middleman of Wall Street and going direct and investing in Main Street, you can really get far superior returns with much lower risk.
Mm-hmm. Yeah, it sounds good. And that's what people want, because if they haven't done it before, they're a little scared. It's like, I don't want to put good, hard-earned money into something. They want these returns. They want someone that, especially a general partner, that has experience. So definitely, Dave, you fit that bill. You are you excel, and you have the experience. And everybody, again, the book is Holistic Wealth Strategy. And Dave, I appreciate you coming on with us, and hope you have a wonderful day.
You bet. Appreciate the opportunity, Mike. Thanks again.
Yep.